Other panelists have spoken about large engines of growth or large engines of regional economic integration. And I'll be speaking about financial sector, which I hope could be an engine, could be a fuel to these engines of growth of regional integration. Now, here, the private sector is a key player, and in fact has been leading the increasing financial integration in sub-Saharan Africa. I mean, just to name a few examples, and these are well known to you, of let's say growing number of private banks, sub-Saharan banks, expanding their branch network across the continent. You have EcoBank in 29 countries, Bank of Africa in 10 countries, and Kenyan commercial banks in 5 countries. These are just a few, and perhaps the numbers have changed recently as in the countries that they operate in. You also see South-South investment of South African banks, Nigerian banks, as well as North African banks in the continent. There's some cross-listing in stock exchanges happening, and also some regional bond issues. These are just developments in the continent on financial services that cross borders. Now, the perception is that a lot more could be done, and that perhaps the level of the development of financial services at the national level could be a constraint. But there's also the view that perhaps the regional economic communities could possibly be a much more facilitating, let's say, forums for much better and much lower cost of financial transactions that cross borders in Africa. Now, there is a tradition in sub-Saharan Africa of regional economic communities facilitating or putting in place regulatory structures that would facilitate the flow of financial services across countries. You have WAIMU, you have CEMAC, you have the Southern Africa, and now recently East African Community that has signed a protocol for, let's say, establishing one market for financial services in the East African Community. So there is a tradition among regional bodies to facilitate financial services. But the results seem to what the feedback from the let's say businesses and the business community, as well as from the financial service providers, is that the results could be a lot better, in the sense that that payment services that cross borders are still fairly costly. Liquidity is more in one country but doesn't flow into another. Let's say regional financial institutions that want to operate at the regional level find it difficult to invest across a number of countries. So the results in these areas are still not quite indicative of a dynamic, let's say, a dynamic environment for financial integration in the African region. So a lot more could be done in this area. Now, what could be the role of the private sector? It's quite important to have forums for dialogue between private sector, governments, and regional economic communities to set priorities as to which particular regulatory obstacle could really be put in place, could really be dismantled in order to facilitate financial services that cross borders in payments, in credit information, in let's say even issues in bond markets, cross-listing, as well as the flow of capital, even those intermediated by banks, by regional banks themselves, as they facilitate the movement of financial services across borders. Now, this forum could be a way for let's say regulatory authorities, which quite dominate the facilitating environment for financial services, to get feedback on what might be key priorities for to move forward the agenda for financial integration, much more effective financial integration in sub-Saharan Africa. Now, let me, in the World Bank, we had put in place recently, or we have discussed much more widely, a new Africa strategy for sub-Saharan Africa. And here, we really do emphasize the the need for regional solutions as game changers. And the financial sector is one area where if facilitated, if financial integration can be much better facilitated, could really be a much more effective fuel for economic integration in the continent. Now, on key priority areas, again, as I said earlier, the level of financial development at a national level could be a constraint. So national authorities could continue to focus on the development of their national financial sectors. There's been a lot of progress in the past 20 years in the sense that one does see major increases even in a simple measure such as private sector credit to GDP in many of the African countries. Where there is strong political commitment in a regional economic body or a group of let's say, national authorities, that one could work toward a much broader-based financial integration agenda that not only puts in place regulatory authorities, but also track results and show results in lowering the financial cost or lowering the transaction cost of financial services as they cross borders. Now, there is a lot could be done on the basics. This is a continuous feedback that we get from financial service, from let's say the financial sector. Much more could be done on integrated payment systems, let's say harmonized financial supervision, cooperation among regulatory authorities, credit information shared among countries, interbank markets. So a lot could be done on the basics. And I think that authorities could focus more their efforts on some of these basic infrastructure for financial integration. On broadly, there is room for let's say, establishing much stronger political consensus for dismantling trade and financial barriers to economic integration. And here, as I said earlier, the feedback from the financial sector on key priorities could really go a long way to focusing some of the efforts on a few key areas that hamper the flow of capital across countries in the continent. On more specific on banking, where one sees quite a change in the banking landscape, where sub-Saharan banks are much more active in a wide number of countries in the continent. There is something there's something specific on home host supervisory agencies and a much better cooperation among them. While it may not be imminent when times are stable, it really is quite important when fragility sets in and potential financial distress sets in for supervisory authorities in the home country as well as in the host country to be able to communicate with each other and share information.
How is it being driven by our government departments? Is there dedicated focus, or is it driven through our various departments? The whole strategy around the BRICS and the integration of it.
Thank you so much. Marilou, I think let's start with you on the complexities of development finance on the continent.
Okay. Well, I'm not sure we completely disagree. I do agree that the cost of financing in many countries in Africa is really quite high. If one takes a look at the spreads in Africa, it's probably the highest in the world as a region. Perhaps, and the next one is probably is Middle East, but Africa stands out in terms of the level of spreads for bank lending, and that's a reality that needs to be addressed partly by financial sector development at the national level, and partly also as a country risk reasons. So we both agree on this prohibitive cost of, say, the very high cost of lending in Africa. Now, that doesn't mean that financial integration is not happening. Many markets are fairly small, so financial institutions do, economic activities cross borders, and so therefore financial services follow that private sector trend. And so that would be an inevitable trend in Africa. But it doesn't mean that it will be the solution for lowering the cost of financing in Africa. It's just part of the agenda for financial sector development in Africa. Now, on financing development, there's not a country that has been funded, or I could be wrong, fully by direct foreign investment. I mean, I think that the reality is Africa needs to harness its domestic financial resources so that it could it could develop and it could grow. Direct foreign investment is one source of funding. One sees the big projects that are in place, but ultimately, broadly, it's really important to harness the domestic financial resources through financial sector development, through savings, and also through the virtuous cycle introduced by economic growth. Access to finance, or the lack of financing, is one of the bottlenecks to entrepreneurship, as well as to private sector growth. But that's just one of them, and many of my esteemed colleagues here have spoken about infrastructure, which is a major constraint, agriculture productivity, that really do constrain growth in the continent. Now, you asked about the New Africa strategy, and the answer is yes. It's focused. The measures will be taken by the countries. The strategy provides some framework that pretty much highlights the importance of achieving competitiveness in the African continent as one area that need to be looked at, increasing productivity for sustaining growth in Africa. There are two others on governance, which is fairly well known, as well as on much more resilience, especially on fragile economies in the continent. But competitiveness and growth is really a key pillar in the New Africa strategy by the World Bank. Thanks.
Doing business in Africa. You can't afford to be without Africa Investor.